everybody's saying that we might see a recession, and so the Fed will be late to cut. The impact on commodities. This is interesting because we think gold will be the place to hide. A divided Congress is actually better for markets on the whole.
Friends, US economy and US markets are the most important markets. Whether we like it or not, we have to accept it. That if US economy is doing good and US markets are doing good, our market will also do good. Although for the last couple of years, there has been some disconnect because retail investors in India have grown, right? And the dependency on FPIs have gone down. But in terms of money flow from bond market to currency to commodity to equity, this multi-asset relationship always exists and will forever exist. It's important for us to learn what is happening in US economy at this moment. It's important for us to know the impact of election which is going to happen in US in this year, what impact that election can have on US economy as well as on US market, and that will lead to some action which will happen in Indian market. So today in this face-to-face, I have a guest who will explain us in detail what this means to us, what this means to US markets, the impact of election in US markets, and thereon we will discuss what it could happen to us. So let's welcome for this face-to-face Ayesha Tariq. Hello everyone, welcome to Face2Face. Again, yet another amazing. This is Face2Face Global with a global expert. Today we have Ayesha Tariq with us. Hello Ayesha, welcome back.
Thank you for having me on.
Thank you. So people who want to know more about Ayesha, you must have seen the video we released on Thursday. She has amazing profile. She has been there, done that, and her understanding of macro is quite impressive. So if you want to learn from 10,000 feet, move down to 1,000 feet, move down to 100 feet. I think this video is going to be very useful for you. Stay till the end, because if you don't stay till the end, you don't get the essence of first few minutes also. All right. So let's start the discussion with you, Ayesha. And you have made a lovely presentation. So would you like to share the screen and we take it from there?
Yes, please. Thank you. Right. So I thought we could start a little bit with our model, something that you also showed interest in. So we were talking about the 10,000 feet view, as you rightly said, right?
Yeah.
And the way we look at it is we try to incorporate all the various pieces into our analysis. So when we look at it, we look at the macro. And when we talk about the macro, basically we look at four different things, which is growth, inflation, policy. Policy includes fiscal and monetary policy, so government policy and central bank policy, and then unemployment. So these are a few of the factors that we look at within the macro. And then, of course, we look at the general cycle, where we're going. Are we early cycle, which is improving? Are we mid-cycle, where we're like at the top? Are we coming down, or are we in a recession? You must have heard all these terms. So we look at the cycle in general, and then we look at these four factors. Based on that, we also look at some of the fundamental factors in stocks. We look at the technical and behavioral, right? So we look at all of this, and then we distill asset allocation strategies. Those strategies could basically be, looking at various sectors, various asset classes. So it could be commodities, could be bonds, could be, different countries. And then we also have week-to-week momentum strategies. This is something you must be very familiar with in your trading journey, because we feel everything matters, right? So the technicals tell you the story from the other side, how people behave, what the markets are doing. So we look at where the momentum is, and we try to sort of give out a dashboard showing people, okay, so this is the momentum now in few of these asset classes. So we have about I want to say, close to 30 asset classes that we look at every week.
Okay.
And we look at the momentum every week. And then we also look at this on a quarterly view, right? So, and then we put all of this out on our website. It's a subscription-based service, but we also email these out to people. So it's an email subscription-based service.
Sure.
And of course, intermittently, risk management is very important, right? And that's something I'm sure you also teach everyone.
Yes.
So we always try to err on the side of caution. Yes, sometimes you need to be bold if you want to make money, but sometimes it pays to be cautious as well. And we try to balance those risks.
Sure. Just 1 minute, Aisha, with your permission, I'm going to borrow this slide and use it for a couple of my presentation. I'm going to give credit to you as well. This is
Sure.
such a brilliant slide. It actually sums up a lot of things which is to do for everyone, whoever is creating a DIY framework for himself or herself. Brilliant.
Absolutely. So this is something that people can use on their own. I mean, this is a framework
Yeah. Yeah.
for a thought, a way of thinking,
Yeah.
right?
Yeah.
And then our output is basically the gray, place where we have all this output where we look at various asset classes and industries, and
Right. Right. Right.
we try to explain them.
Lovely. Just a disclaimer for my learners. We just met each other over Twitter. We don't have any commercial relationship. I'm sure her services or subscription would be very nice. Please do visit her website, see what she's doing. If that adds to your value of managing a large portfolio or global portfolio, please feel free to connect with her. We'll give her Twitter handle below this video so that you can connect with her as per your requirement. Thanks, Aisha. Please
Thank
continue.
you. Okay, so on to our main topic and the most debated topic right now, the US
Yeah.
presidential elections, right? So I'm just going to dive right into it because there's a lot going on. So little historical context. Now, usually we would see incumbents win in an election. So most presidents get a second term, right? This time we have a very unusual situation because the incumbent, who's President Joe Biden, has actually stepped aside. So we are seeing a little bit of a change here. So now we have two candidates who have, uh, for what it's worth, have not served in just the previous term in the presidential capacity, right? So we
Okay.
have a vice president and we have a former president. So Vice President Harris and former President Trump. Now, just a disclaimer here, Vice President Harris has not been nominated as the official candidate as yet.
Okay.
We should hear about that this month in August. They're going to nominate her, but the chances are that she will be nominated. Now, why this is an interesting election? The US has gone through a huge economic shift, right? So they've seen inflation like they haven't seen in decades. The
Okay.
level of inflation, 7, 8% inflation that they faced, and the world faced, in fact, all of
Yeah.
us did, right? It was a trickle down effect. Um, we haven't seen this kind of spike in inflation in decades. And because of that, because of the hardship people have faced in the economy, because of the change in the economy, um, we believe the economy will be a very major focus. Usually, social issues are focused. Here, some of the social issues are as well intertwined with the economy and inflation. And we'll see in a little bit how that really matters.
Okay.
So, as I said, things are getting interesting now. We have, and this is why we think Vice President Harris will actually be nominated, because she started to, let's say, trail Donald Trump by a very small margin now. So in many of the polls, she's neck and neck with him. Prior to that, former President Trump actually had a huge lead over Biden. The margin was huge.
Yeah.
Now that's like narrowing.
Oh,
So with her sort of coming onto the scene, what we're seeing is many of the polls are showing neck and neck. Some are even actually showing her leading.
Okay. Okay.
Now, you ask an average American, he will say, no, this is wrong. No, that is wrong,
Yeah. Yeah.
because everybody has their views, everybody has their biases. But we are seeing some of the polls. This one is from Real Clear Politics from Goldman Sachs. This one is from the one on the left is from Predicted. So there are various polls. We're looking at many of them. The truth is, the margin is narrowing. So she is giving him some competition here, let's say. And obviously, when competition heats up, things start to become far more interesting.
Okay. Okay.
Now,
There is a general
yes,
perception in India that because of that attack on him, a lot of emotional support will go to him, and suddenly he will witness a lot of, support from people who were probably not supporting him earlier. Have you seen that getting converted in data?
yes, yes.
Okay.
In fact, right after the assassination attempt, his poll ratings went up massively.
Yeah.
And so there were two things that happened like in succession at that time. One was the debate where Biden wasn't didn't have his best performance, let's say.
Yeah.
Um, and then right after that, like about a week or two, I think after that, the assassination attempt. So both these issues sort of put Donald Trump in a huge lead.
Okay.
And then Biden stepped aside. And as soon as VP Harris started coming onto the scene, things
Okay.
started changing a lot because
Oh.
don't forget, she gets the minority vote here, right?
Yeah. Yeah.
She's a woman.
Yeah.
She is a woman of color.
Hmm.
And that sort of and some of her policies are a little less stringent in the sense that some of the social issues are softer.
Yeah.
So for which reason she is getting people want to change. People have already seen Trump. People had
Hmm.
already seen Biden. So at that point, it was like a boring situation, like better of the two evils, let's say. And I don't want to call them evil, but it's just a saying, right?
Yeah. Yeah.
So we've already seen this story before.
Yeah.
Let's get something new. So I suppose, VP Harris brings some of that newness, right? Some of that change to the scene.
Yeah.
And you can see that across the world. Everybody wants change.
Yeah.
In Europe, you're seeing sweeping changes everywhere.
Yeah.
So that's one of the things that is probably helping her. So one is the minority vote, and the other is the fact that we just want a change, right?
Yeah. Yeah. Yeah.
Now, one of the things that was happening when after that assassination attempt was everybody was thinking that they will have a Republican sweep. So just to clarify, Trump is the Republican candidate. Harris will be the Democratic candidate. And so everybody was thinking that there's going to be a Republican sweep in the sense the Congress will also be dominated by Republicans, and then you'll have a Republican president. The odds of that are now coming down.
Oh.
Um, and so why does a sweep matter? So when you have the same party president and the same party Congress, it's obvious that it makes it easier for policies to be passed, right?
Yeah.
So
Yeah.
same party doesn't, always fight their own president. But sometimes this may not also be true. Okay, so we've seen sometimes they want to look impartial, and then what ends up happening actually is they actually fight their own president. But some of the issues, like the debt ceiling issues that we saw, some of the budget issues that we saw, that may actually go more smoothly. But interestingly, a divided Congress, as you can see in this picture over here, a divided Congress is actually better for markets on the whole, no matter which president is sitting in the Oval Office.
Okay.
So at the end of the day, for us, we probably want a divided Congress because statistically, that's what's proven to be better for the markets. But in general, I think, for policy making and budget issues, quite possibly having the same or the opposite might actually be helpful as well.
Okay. Interesting.
So now to look at some of the policies. So I don't want to spend too much time. You can have a look at this at your leisure. But suffice to say that both candidates have inflationary policies.
Okay.
Okay. Not only have we seen that coming into the election, but we are also going to see that going forward. Now, the Republican or Trump's policies are a little bit more inflationary. Both have high fiscal spending policies, but Trump also wants to cut taxes, and that can be inflationary.
Yeah.
The other issue he has is obviously the tariffs, right? So you must have heard he's talked a lot about, introducing higher tariffs, 10% tariff globally, and then 60% tariff on China.
Yeah.
So these are some of the things that, he's been talking about. But Trump is also more market friendly, so there will be less regulation on, say, for example, AI and Bitcoin and these and oil companies.
Yeah.
Whereas the Democrats are a little bit more stringent in terms of regulations. There have been a lot of crackdowns in the last 4 years when Biden was in office. A lot of mergers and acquisitions did not go through because, they stopped it. Those kind of things might get easier. And of course, then there is the illegal immigration stance. So the Democrats want to do things in a more legislative manner, so more according to the law, process people. Then, so this is seemingly slower and less effective, but in the long run, it's better. However, Trump, on the other hand, he just wants to catch people and deport them directly, which is a much stronger stance. And that will obviously affect the working population.
Yeah.
So now we have these policies. Let's look at the effect of these policies on, our macro factors, right? So growth, inflation, unemployment, the Fed cutting cycle, rates, yields, markets, and the dollar. So as I said, Republican policies, Trump's policies are far more inflationary. But because of the fiscal spending, we're likely to see higher growth there as well. Now, in terms of the inflation, last time when he had put some of the tariffs on China, there was an increase in prices, general increase in prices of 0.3%. That was the statistic.
Yeah.
JP Morgan did a study and they said that if both of the tariffs are introduced, there will be an increase in prices in the economy of 2.4%.
Oh.
Yes, and that may seem like a small number, but it is substantial
Yeah.
when you add it to the general level of inflation already, right? So then we go back up to like 4 or 5% again.
Yeah.
So which isn't a great situation. Talking about immigration, as I just said, uh, what he's trying to do is take workers out. And a lot of these people actually helped keep the unemployment rate very low in the
Yeah.
US.
Yeah.
As you know, it's still only 4.3%. So this has sort of helped not just keep unemployment low, but also keep wages low. Because
Hmm.
many of these workers, like the illegal immigrants, they take up the low wage
Yeah.
jobs.
Yeah.
If you put an American in that job, you're going to have to pay double or triple the salary,
Yeah.
right? It's not fair, but that's how it is.
Yeah.
And so taking these people out of the country might actually cause a wage spiral. And when we say wage spiral, it means, you have to pay higher wages. Higher wages means higher prices for your goods. Higher prices for your goods means inflation. Inflation means you have to pay people again more because they can't afford to buy the product. So that's what we call a wage spiral, right?
Yeah.
Um, and so if we have higher inflation, there is a chance that the Fed may have to keep rates higher for longer,
Yeah.
right? If the Democrats go with the policies that they're going with right now, and we've seen these policies already, they are moderating a little bit on fiscal spending here. The Fed may be able to follow their path that they've laid out. They've laid out 4 cuts for next year. They may be able to follow that path.
Yeah. Yeah.
So at the end of the day, what happens when inflation goes higher, you see higher yields because Fed will also keep rates higher. But again, if you remember, I said Republican policies are market friendly and the fiscal spending actually boosts market. We've seen that in India. We've
Yeah.
seen that in the US. We've seen that in many parts of the world, right? You might have higher rates. Even with the higher rates, markets are going to all-time high
Yeah.
because of the fiscal spending and the liquidity in the market, right? So under the Republicans, we might see a higher market. But because rates will remain stronger, yields will remain higher, we'll also see a stronger dollar. And then for the global, like for the world, this is what matters, the US dollar, right? And so we come to the global impact of what happens with the US elections.
Okay.
When you have a stronger dollar, what happens is you have higher inflation. Why? Because if your dollar is strong, if the dollar is stronger, your currency becomes weaker, right?
Yeah.
When your currency becomes weaker, first of all, you have the situation that commodities are all priced in US dollar, which
Yeah.
means you have to spend more of your currency to buy that commodity, right?
Yeah.
Because the dollar is stronger. You have to convert it into a stronger currency. So you have to put more and more of your currency. That puts a lot of hardship on the country. Um, most countries also borrow in US dollars. So
Yeah.
all these foreign currency debt to the IMF and to the World Bank, many of the developing countries I'm talking about, it's in dollars. So when they have to pay back their interest, when they have to pay back the principal, they have to convert and pay it in dollars,
Okay.
which means more of their currency needs to be used to buy those dollars, right?
Right.
Again, more hardship. So at the end of the day, a stronger dollar actually brings in more inflation to other countries,
Yeah.
right? Because your dollar, your purchasing power of your local currency is going down.
Especially the
So
countries which are net importers, right?
absolutely,
Yeah.
absolutely, yeah. And everything considered, this will bring in a generally higher level of inflation across the world. Now, also another study by, I think, JP Morgan, if I'm correct, they said trade wars could actually push up the dollar by 4 to 6%, right?
Okay.
So this is a massive impact. So you have a stronger dollar, you have higher inflation. When you have higher inflation, central banks cannot cut as quickly. They have to keep the rates higher to try and
Yeah.
bring down that inflation, right?
Yeah.
Something that's happening in India. RBI is holding rates because, food inflation is still going higher.
Yeah.
And then, of course, you have the rate differential. So that goes back to the dollar as well. But you don't want to have the Fed at 5% and RBI at 4%. You cannot have that. That's
Yeah.
like goes the opposite way. So unless the Fed cuts, it becomes much harder for, other countries to cut as well.
Yeah.
And so if there's inflation in the US, the Fed will not cut. Other countries have a problem as well. It's happening in the Philippines as well.
Yeah.
So then you can have another general level of higher rates in the economy. It's tough for people, the regular people, right?
Yeah.
Rich people can manage. They have investments. They can actually earn out of higher rates. For everyday people, it becomes a very challenging situation with high inflation, high rates, and you're just squeezed in between. This will also lead to slower growth, right? Because people will not be able to, spend as much. Um, Tariffs will also lead to slower growth because tariffs will add to the cost of products. So again, inflationary. But we think that this proposed 10% global tariff and 60% on China is a bit too much.
Yeah.
And we don't think it's going to be implemented. So even if he wants to implement it, I believe it will be fought by Congress, even his own Congress, even if there is a Republican Congress, um, because it's too much. And then any implementation of these tariffs will take some time, so there is some respite there. But ultimately, even a small amount of tariffs will make companies rethink their strategies, right? We
Yeah.
have a huge number of developing countries who are selling into the US.
Yeah.
And global tariffs means it's a domino effect.
Yeah.
So even if Europe is selling to US for something else, something totally different, when we are selling to Europe, there's going to be a higher cost to it, because Europe will try to compensate that extra cost somewhere else.
Yeah.
So companies will have to start rethinking their strategies, profits will be lower, capex will be lower, and all in all, global growth will slow, which is not great for anyone. So at the end of the day, this is an important election, because if we do see the policies come the way that they're supposed to, it's not going to be helpful for anyone across the globe,
Yeah.
whether it be Philippines, China, India, Bangladesh, even the Middle East. So everybody will be affected.
Fair
That's
point.
something to bear in mind.
Fair point. Aisha, I have a couple of questions here.
Sure.
I always thought that Trump wants a weaker dollar. Was my inference
Correct.
wrong, or
No. You're
eh,
absolutely right. He does want a weaker dollar,
yeah,
and he said that vehemently. Even very recently, he said that. And the reason he wants a weaker dollar is because he wants to bring back manufacturing into the country.
yeah,
And a weaker dollar will make US manufacturing more competitive, right? Because
yeah,
more people will be able to buy goods from the US because
yeah,
it will technically be cheaper in your currency.
absolutely,
Uh, that's what he
absolutely.
wants.
But his actions like these could,
But his
yeah.
policies don't jive with that. That's the
Okay, got
problem.
it, got it.
And so, therefore, again, this is a great point that you brought up, because it tells us that maybe what he's saying right now is just to rile people up in favor of nationalism. Okay,
Yeah,
that okay, we'll put tariffs and we'll block people from coming, and we'll block outside goods to make America great again, as he says, right?
yeah,
But at the end of the day, when and I'm sure he knows this, he's been a businessman. Um, when they put two and two together and they see that it will actually it may actually result in a stronger dollar, he might actually back off from the tariff situation the way
yeah,
he's been talking. And that's perhaps another reason why we say that these policies may not be implemented to the extent that they're talking about now. We know what happens during an election.
yeah,
Politicians promise the sun and the moon, and then finally they come down to earth, right?
yeah,
So it could be that kind of a situation, and if it is, that's good. That's good, because at the end of the day, let's say relatively weaker dollar is actually good for the world. It's
yeah,
good for global growth.
yeah, yeah. Lovely.
So next up we have China. So I just wanted to look at China very briefly. Reason being, it is the second largest economy in the world, and a 60% tariff on them will again have a domino effect all over the world, right?
Yeah.
So the previous Trump, this is a chart for the previous Trump administration when he did put 10% tariffs and stuff like that. And you can see this is the CNY, right? So you can see the Chinese yuan actually take a hit at the time. So additional tariffs will definitely increase the pressure on the markets in China.
Hmm.
They are already facing a lot of problems. They are facing a crisis of confidence. Their growth has slowed. Average growth in China used to be 8%. The last print came out at 4.7%.
Yeah.
Now, some of that is engineered because China wants to focus on new technology. But then here is the problem. Both candidates have policies that want to crack down on those new technology manufacturing, right? So they're cracking down on chips, they're cracking down on EVs, things that China actually wants to focus on right now. So everything considered, I think the impact on China will still be much more than what you would see elsewhere.
Mm.
And
Mm.
we're already seeing this. Um, since Biden announced some of those chip crackdowns and all of that, China started to actually rally for a while. And
Mm.
then, since all these policies started to be put in place, we've
Mm.
seen the market start to decline in
Yeah.
China. So it's the local issues as well,
Yeah.
but also these issues have sort of, you know, uh, knocked things over, let's say.
Yeah.
So coming into this year, we did a bit of a research as to, who would be the winners and who would be the losers um, if China's growth starts to decline. And businesses start to move away from China because of all these issues. Because trade wars mean you don't want to deal with a country who's in a trade war with the US.
Yeah.
It's as simple as that.
Yeah.
And so we've already started seeing some of that play out. Winners are Mexico and India and Vietnam, big time. These three countries have won big time because of that. Apple moved their manufacturing, Tesla is opening a plant, so various things happening in India, which is great for India in the long run. And we're seeing some of that also play out in the markets in India, right?
Yeah.
Um, we are long India, by the way, at Macrovisor. So I think the whole world might be long in India by now.
Yeah, but
um,
I'm very keen to know how much the world is long India, because I mean, if you look at the MSCI index and other benchmarks, says yes, people have now weightages to India, but it was in single digit till a couple of years ago. I don't know the latest that whether the allocation has gone up or not. Maybe we'll talk about this towards the end of our discussion, that how much
I think
is
I
your
do believe
allocation?
I do believe allocation has changed now.
Okay.
There is a higher allocation to India. Um, I'm pretty quite sure. I don't remember the statistic, but it's not single digit anymore,
Okay.
for
Okay.
sure. So, and then of course you have the losers who are dependent on China for, their exports and, dependent on China for many things. So Taiwan, South Korea, Thailand, these are some of the countries that may actually suffer because people move away from dealing with China.
Yeah.
Um, Now, the impact on commodities. This is interesting because we think gold will be the place to hide. Okay, with trade wars and central banks, everything that's going on, and you can see that the geopolitical situation is driving the price of gold higher and higher. Right, we've reached all-time highs. Many people think we could actually cross 3,000 as well. Uh, we have a target close to that as well. So gold is probably the commodity of the next 3 to 4 years, let's say, or
Yeah.
2 to 3 years. Um, Oil. So now I think everybody's heard the policy from Trump, drill, baby, drill. He intends to flood the market with oil. Now, under Trump, what we see is that the deregulation may actually increase production by 3 million barrels. But flooding the market with oil would mean pushing prices down. Um, and if prices go below $60 per barrel, um, it might be very difficult to actually get people to drill. The way oil companies work, and I'm sure most of you already know this, is that if it's not profitable for them to drill, they won't drill, even if
Yeah.
oil is in the ground, right?
Yep. Yep.
So there has to be a certain minimum level of oil price for them to start drilling and taking oil off the from the ground. And we think that is about $60 per barrel. So he might start using subsidies. But interestingly, under Biden, oil production actually increased a lot.
Okay.
And President Harris has even more stringent policies on oil companies and more focus on clean energy.
Okay.
So she might restrict oil, which actually pushes the price of crude higher, which actually makes it more profitable for oil companies. And it's quite interesting that the opposite effect happens, that oil companies actually do better under the Democrats because they try to restrict oil.
This is so
Uh,
funny.
Yes, so it's a contrary situation.
Yeah.
But when you think about it logically, it makes sense, right? So Trump might try to use subsidies and other methods of, helping the oil companies, but at the end of the day, we may see actually oil companies do better under the Democrats. Now, and for copper, very simple. China is in trouble, copper is in trouble, right? This has been a global thing for a while. Um, and under the Democrats, as I said, they want to focus on new technology, EVs and clean energy, and all of this needs copper. And so that may actually boost copper demand and hence copper prices. So gold does better, we think, under either administration because of all the inflationary issues and the trade wars and everything that's going on. Crude is a little bit more nuanced. Copper, we think, will do better under the Democrats.
Any view on silver?
Silver usually follows precious metals. Now, silver is interesting. Silver is actually a mix between, let's say, gold and copper because of the way it's used, right? So, if you have more manufacturing brought back to the US, that will boost the price of silver, that will boost the demand for silver. Silver still isn't a metal where people hide, you know,
Yeah.
gold is still the place, gold, in fact, dollars as well, is the
Yeah.
place to hide.
Yeah.
So silver, we're taking a middle of the road approach over here and probably play it more by ear as we go along.
Okay. Okay.
Um, uh, so now we look at a little bit of the impacts on the market. So US equity markets usually have a bad year in presidential years because there's a lot of uncertainty, volatility is high. August, September, and then just before the election tends to be, bad months because people start to get worried, jittery, what's happening. August, because you're choosing the candidates, you're confirming the candidates. September, because usually have the first presidential debate, and so people again get very, you know, um, and then also you have a seasonality factor in general. This is even outside of presidential years. You have lower summer months, lower liquidity in summer months, and so that seasonality also plays a part. This year, we might get a Fed cut in September, and so we might see a slightly different scenario over there, where we might see a relief, a bit of a rally going into the Fed cut. Um, In general, markets see a relief rally after the president is elected, right?
Okay.
Because now we are taking off our hedges, we are happy, we know what's happening, we have a decision, so volatility goes down and the markets start to go up. This time, however, we are seeing slightly higher volatility right after the elections.
Yeah.
Um, and I talked to you about this briefly. One of the reasons so volatility, again, it's come down a little bit after BP Harris came into the race because some of the uncertainty has come down.
Yeah.
And so much of it is being priced as before, but there is still a slight spike right after the election. And one of the reasons for that is because even after Trump was elected and after Biden was elected last two times, the last two presidents, we had some turmoil. Okay, so the results were not accepted readily. There were some court cases. There was an insurrection after, Biden was elected. So people are still feeling like there might be some of that, uncertainty, and that might actually push markets down. So they're trying to, hedge for that into the future. So even after the elections, we may not see that massive relief rally as we have seen in the past. So something just to keep in mind.
That's interesting. In fact, as we are speaking, Aisha, just wanted to share with you, Nasdaq is down 5%. I mean, today, since it closed on Friday. The market is live right now. And I wish we should have recorded this earlier. Already market has fallen. Nasdaq has fallen from the top to here by almost 16%.
Yes.
This,
I mean, as of Friday, it was about 11 something percent.
yeah.
And so now it would be.
Is it? What's but why Nasdaq is falling so much and Dow Jones doesn't show so much correction in Nasdaq? Is it because of the whole AI hype
Correct.
everywhere? There's a high beta
Correct.
there always.
The beta is higher. And of course, you have a situation where positioning was extremely lopsided, right? So
Hmm.
everybody was rushing into like the large caps, right? Uh, In the NASDAQ, so the
Yeah.
tech mega caps. And so that lopsided positioning, now that it's coming off, you're seeing more of a, impact in the NASDAQ than you are in the S&P or the Dow Jones.
Right. Right. Right.
So the Dow obviously is balanced by many of the other companies. So that's sort of,
Right.
but we saw this coming. 17th of July kind of marked the top of the market, so
Yeah.
to speak. Summer is always difficult. August is always a very difficult month. And the more lopsided the positioning, the more you will see when it unwinds, you will see like a drastic, change. And so that's what's happening right now. Um, so we'll just quickly finish this and then we can
Sure,
talk a little bit more about the markets.
sure, sure.
So in terms of equity sectors, as we said, the Democrats are a little bit more, um, they like EVs, technology. So we are likely to see sectors, or based on historical context, sectors that outperform is technology, energy, and utilities. In terms of the Republican administration, some of the more defensive sectors actually do better. So that's quite interesting there. So, and this is just a historical context. History doesn't have to repeat itself, but we do look at the data just to get an idea of where things are going, right?
Sure.
And yeah, that's it. That's all we have.
Lovely, lovely. I mean, very impressive. I must tell you that this was literally a masterclass on macro and including all the other aspects of US election. It was very
Thank you.
interesting. Now let's spend some time on, I mean, couple of minutes on market and what is happening right now. It's so much of turmoil. Obviously, as a in, I mean, Indian market has its own, uh, fundamentals. The reason why we have been outperforming other markets and retail investors have been investing like crazy in India. But in this kind of a scenario, everyone becomes jittery that whether
Mm.
should I continue, should I exit? So let's talk about what is happening right now. Where do you see the weakness coming from? Is it election-led weakness? Why the yen carry? Suddenly we have started talking about yen carry getting reversed and all those things. Give us some perspective about it right now.
Sure. So it's a confluence of factors, right? It's never
Mhm.
just one thing when it comes to the markets, and especially these kind of drawdowns.
Yeah,
When you have drawdowns like these, you know that it's not just one thing that's happening in the market. It's
yeah.
obviously a confluence of factors that's come together, which has pushed things to a level for steep drawdowns. And, couple of weeks ago, what I said, selling begets selling, and that panic kind of starts to spread. Interestingly, positioning is still quite bullish in the US markets.
Yeah.
We'll see what happens after this week, but people are still buying the dip. We don't think that you should buy the dip right here. Um, you probably teach this better than me, but when markets are going down, you follow the market, right? You don't fight the market.
Yeah.
And therefore, right now, what we're seeing is a lot of positioning unwinding. We might see this go further. And so we should actually wait until it settles, some consolidation, and then people start to buy again. So even if you miss the bottom, it's okay. It's okay. Um, but it's better not to get thrashed, right?
Yeah. That's true.
um, So what's happening is, let's say it started with a few things. One thing okay, so let's talk about seasonality first.
Yeah.
June, July, August are months where people go on holiday, okay? And so therefore there's less liquidity in the market, fewer people are trading. And unlike us in the subcontinent, when people go on holiday, they actually go on holiday, right?
Okay.
They're sitting on the beach, they're not trading. um, so that's one thing that happens. So you have less liquidity in the market because fewer people are in the market, right? And then also they leave their juniors on the desks who start to panic when the market starts to go down. So some of those positions also come off a little bit more, and it's like a little bit more magnified. But and this might seem funny, but it's true. It's how it happens, right? Then you have a situation where you have the election, right? So in election years, yes, we do see far more, volatility, uncertainty, and that sort of puts pressure on the markets a little bit more. Third thing was earnings. Okay. So everybody knew that there would be a bit of a slowdown in the Max 7 earnings, but they started digging under the surface. Now, these lofty valuations have started to matter, and people are starting to ask questions. Like, finally, people are asking, what are you doing with the capex for AI, right? So these were some of the bigger questions that was asked of Google, that was asked of Tesla. Like, are they investing in AI? How much? What's going on? Microsoft. Um, so the issue is, the AI story is still very much alive, and it's not like the other stories, and it is a valid story. But I think people got ahead of themselves, right? And they pulled forward a lot of the future earnings on AI. And that sort of showed up in the valuations, in the lofty valuations. And some of that is being questioned now, right? So people are lightening some of the positioning there. To be fair, they've made money, right? So they're thinking, why not take some off the table and let's see where we go from
Yeah.
here.
Yeah.
The next thing is the macro data, and that's what sort of killed the market on Friday, Thursday and Friday. Yes, the Fed may cut in September, but now what everybody is saying is that the Fed is behind the curve. We
Yeah.
don't think so, but everybody's saying that given the spike in unemployment, given the, we saw ISM PMI's manufacturing data come down quite a bit. So given all of this, um, everybody's saying that we might see a recession. And so the Fed will be late to cut.
Okay.
We don't think so. That we don't think a recession is imminent the way everybody is saying it is. Um, and the Fed will cut in September, but this will be more of an insurance cut so that they can claim a soft landing. So they will cut before there is a recession. Um, so this confluence of factors, so you have the macro weaker, you have earnings, being questioned and to a certain extent weaker. You have seasonality, you have elections. So you have four things coming together and sort of with the lopsided positioning that was always already there, it, pushed the market over the edge. Now, this already started happening. And one of the things that sparked that was kind of Biden's announcement on, the crackdown in chips, yet another level of crackdown in chips. That spread to Asian markets as well. So Asian
Yeah.
chip companies also started to go down. At the same time, the BOJ meeting was coming up. So two things happened at once, and people are drawing a correlation between the two. This is my view. Um, the BOJ meeting was coming up with the yen weakening the way it was. Everybody started to price in a possible hike, and they were front running that market.
Mm.
So
Mm.
in the yen market, what happened was, so we saw some of that, strength come back in the yen because people were thinking a hike will come. And most importantly, the Bank of Japan started to or announced that they are starting to unwind their great monetary policy experiment, the QQE, right?
Yeah.
So they started that QQE back in what I think early 2000s. And then that is sort of being unwound for the first time now in so many years, right? They have talked about tapering their bond purchases, so they will purchase less now. And that will get lesser and lesser. So the taper will be ramped up into 2026.
Mm.
Uh, Now, the Japanese market was a huge source of liquidity,
Yeah.
right? And that's where the concept of the carry trade also came from.
Yeah.
So just to take a step back and explain that concept of the carry trade, what happened over there,
Yeah.
because rates went negative or rates fell to zero, but all this liquidity came into the market. So when the government purchases bonds, it infuses liquidity into the market,
Yeah.
right?
Yeah.
So with all that cash that investors had, now they want a bang for their buck, right? Everybody wants to make money on their money. So they went searching for yields, right? So you want to put your money in a higher yielding place, right? Um, and rates were low, so they could even borrow at those lower rates. So the carry trade is essentially when you borrow in that kind of a country,
Yeah.
JPY, where the rates were close to zero, and then you put that money, you invest it in a country where rates are higher.
Yeah.
For the longest time, the US rates were obviously lower, but when US rates started to, go up, much of the carry trade started again because people started to borrow in that. Now, this holds as long as the currency differential is kind of stable,
Yeah.
right?
Yeah.
the deterioration in the yen sort of made this very untenable in the last few months, where it made it difficult. But the issue here is the liquidity. It's not the unwinding of the carry trade, because the differential is still huge between the JGB yield, or the
Yeah.
Japanese government yield,
Yeah.
is still much, much, much lower than
USU.
the US dollar yield.
Yeah.
So people will still take whatever liquidity is there and still borrow, even at 0.25%, which is the current prevailing rate from the government right now. And they can still put it in a US Treasury bond, right? So when you put that funds in the US Treasury bond, what happens is the demand for bonds go up. When the demand for something goes up, the price goes up, right? When the price for bonds go up, the yields come down.
Will come down. Correct.
Okay. So if there was an unwinding of this carry trade, what would happen? People would sell those bonds,
Yeah.
right? So when you sell something, supply comes in, prices go down,
Yeah.
right? So yields would go up.
Yeah.
And so this is exactly what we were talking about. Look at the yield.
Yeah. It is going down.
This is the 10-year yield,
Yeah.
right? The yields actually went down. So
Yeah.
this is the first place it actually should show up.
Yeah. Yeah.
And since it has not shown up here, our view is whatever you're seeing is not an unwinding of the carry trade.
Yeah.
What's happening in Japan? You have global slowdown in the sense that, okay, when people think that there is a recession happening in the US, that will go across the world. There will be a global slowdown.
Yeah.
Okay. So that is one fear that is spreading. So you will more often than not see that when there is a talk of global slowdown and sell off in the market because of a slowdown in the US, you will see other markets across the world also start to slow down.
Yeah.
Okay, that's one factor. Second factor was the BOJ actually tapering their liquidity. So
Yeah.
now Japanese investors know that the liquidity is coming down in their own markets, right? So, and the yen became stronger. And so the market also went down
Yeah.
because a lot of the Nikkei is dominated by exporters.
Yeah.
Mitsubishi, Toyota, all these people, right? They, other than the banks, these people dominate um, the Nikkei, the
Okay.
exporters.
Yeah.
With a stronger yen, the exporters, the stock price for exporters fell. So that was another thing that happened in the yen. So if you look at it, two things happened at once. Some of it was okay, interrelated in the sense that that global growth scare was there.
Yeah.
Sorry, that was the 7-year yield. This is the 10-year yield. I
Yeah.
mean, they all look the same now.
Yeah. Yeah.
But it's not technically the unwinding of the carry trade here that is actually driving the sell-off in US markets.
Okay. Okay. That's very good explanation. Really, really impressive. Uh, Before we close this one, I have to ask you about Indian market because my audience is largely Indians investing in India, and you do track Indian market. You said that you have
Yes.
increased your allocation there. So, what should we do given the current scenario? If it is not a yen carry, it's just a recession which is probably overplaying the mind of big investors. What should we do in India now?
So what our recommendation was for the third quarter actually was that to take some profits
Okay.
and to lighten up positioning. So coming into the third quarter, we said that our long-term view on India remains intact.
Okay.
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 And so does it on the Japanese stock market as well, by the way.
Yeah.
Okay.
Yeah.
And when we say long-term view, we mean like 5-year view, right?
Okay.
So we do think that in 5 years the Indian market will grow. This is a no-brainer. But grow means outperform many of the other countries in the world. That's what
Yeah.
we mean. So that is intact. However, we look at quarter to quarter, week to week positioning, and the quarter to quarter positioning coming into this quarter was to lighten up a little bit because of the local market profitability situation as well. We looked at, the wholesale price index. Wages are being sort of increased. So
Yeah.
there are some prices that are going up at the wholesale level, and this is going to put a little bit of pressure in terms of profitability on the market. So if you look at, there was a beautiful statistic chart that showed that uh, I wonder if I can find it. I don't. I'll probably send it to you later. You can have
Yeah.
a look at it.
Yes. Yes. I'll show
So
that to people in the video itself
so
if you share that with
basically,
us.
profits and revenues should move in the same direction,
Sure.
right?
Sure.
But for the Indian market, what we're seeing is profits are moving like this and revenues are like flat. You know what I
Sure.
mean?
Yeah.
So the EPS has been growing massively, but the
Yeah.
revenue hasn't grown to the same extent, right?
That's true.
So we felt like this gap may narrow now, may start to narrow because the wholesale price index is also going up and stuff like that. So just not to come out completely, but to take some profits and take some profits off the table and then go in again once markets start, like once the pullback happens. But the long-term view is still intact.
Okay. That's superb. Good to hear. Very comforting and amazing session, Aisha. This was
Thank
literally
you.
a masterclass for me. Learned a lot, and I'm sure my learners would have learned a lot from you. So they will definitely follow you on your social media. And in case they have follow-on question, my request is if you can just oblige them with
Of
quick
course.
replies.
Of course.
Yeah.
And thank you so much for having me on. I really enjoyed this. I really enjoyed talking to you. You're very easy to talk to. Uh, but before we go, what's your view on the Indian market? I asked you this as well before.
Yeah, yeah. So, I do track the earnings very closely, and I strongly believe in sector rotation. As all of us who have been spending a lot of time on the market, we realize finally that Nifty Bank Nifty is a very tough nut to crack.
Mm,
It doesn't make sense also for us to
mm,
keep on looking at it and change our views based on
right.
2, 3, 5% movement of the indices. But I'm seeing lovely moonshots in a lot of sectors in India.
Okay.
We have gone through some amazing transition in terms of formalization of our economy. So
Mm,
I would rather be restricting myself to great sectors which are showing earning growth, and it's not very tough to identify great stocks in those sectors to keep on riding the rally. Yeah.
okay. So you're saying sectors like maybe some of the newer, like growing sectors, like growth
So even
versus old school value.
you know that in India, government-led spending has been the catalyst of
Yes.
growth of the GDP, and
Yes.
even the current budget, they want to continue the spending, but at the same time, now their focus is more towards rural India. So employment generation, giving a lot of impetus, a lot of money at the ground
Yes.
level to
Which
rural,
was required,
which
right?
is required. Correct. I mean, we all belong to a sub-Indian continent, and we know how much it is important to uplift the ground level. Also, rich can't become richer all the time. There is a need of
Correct.
uplifting every one of us. So I think that is happening in India. So consumption-led FMCG. Things which are related to rural will pick
Understood.
up quite
Yeah.
well in India, and this is already
Yeah.
happening.
Great. That's it's good to know that it's playing out that way. Yes.
Yeah. Great. Thank you, Aisha, for this amazing session. Really enjoyed
Thank
it,
you so
and
much.
looking forward to meet you someday in Dubai, or if at all you are around Bangladesh, and then the Bengal is just beside Bangladesh, so
Stone's throw away,
it's
right? As
just
they
a
say.
stone, literally. Thank you. Thanks a
Definitely.
lot for your
Thank you so
time. Really
much.
appreciate it.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.